All right. So today, the 29th day of May, right? Middle of the week, we come in with a lot of bearish context based on a week close yesterday and a week open today. 75% of the room is bearish. The market's bearish. We open up, go lower. And there were some transitional moments. But the one I want to focus on, because it was an impromptu statement given by Mueller, who's the special prosecutor, speculation as to what he was going to say. There was market moving opportunity. As soon as he comes on, he says the most bullish thing that he could have said, which was just knee jerk. And that's what we talked about. Any kind of bullish comments will probably be short lived amid everything that's going on today fundamentally. But he said, I'm going to read it because it was right at the top of his speech. Speaking today because investigation is complete and report has been made public. We're formally closing special counsel's office. Confirms he's resigning. So those first few lines give the market a little relief rally. Isn't going to say anything that's in the eyes of giving Congress, another lane to march down and validation to continue to investigate. That's the initial knee-jerk reaction. And you see it right in here. It was catchable 81, 82, and they rallied to 86. Now, 86 provided resistance even before that pop at 10 o'clock. And it was this red line that came across this edge zone that stopped it right in there. Actually, right in here a couple times, right? So it rallies on the first couple lines that he says, rotates down, re-rally, stops them at 86. They break them into some support, rally them back in 86, back in 86. It said at some point through 86, they're going to find a bid and take out those 87 3/4. There was a big offer up there, about 1,100, 1,200, and they all traded right here, 87 3/4. You see it right there. So they finally take out 86s, which is important to note because they rally through it, back through it on the downside. You got to take your horns off. In real time, you have to take your horns off because that became an important spot to defend, and they effortlessly go through it right in here, and that's what he said, or what we said. And at that point, he was 10 minutes into this statement, and it was coming to the conclusion that he was indeed giving Democrats the open lane to say that they couldn't even indict if they had something because you can't indict a sitting president. He kept underscoring that, to as Mark put it, kept the can of worms open for congressional Democrats. And the market didn't take a beating through all this just because of that. It was just the phrase, the straw that broke the camel's back, or helped break it, amid everything else with China, U.S., the trade war and everything. The bullish reaction was going to be knee-jerk, and it was. He pretty much didn't say anything different than he wrote in the report. He just wanted to get a little face time before he resigned. But net, there's not a giant surprise to the market. It was already fragile. So just remember the key points. Something that's catchable, being prepared for it, so you're not surprised. Out of the gate, it was bullish. 86s became important that otherwise wouldn't have been important through this statement. They got through it, and then once they got back through it to the downside, the bears took back over. That's how you're able to highlight and understand an important price after the market opens instead of trying to always prepare for what's important before the market opens.